Three stocks I'm buying now, February 2020 edition. Welcome in, guys, to my favorite series I do on this channel each and every month, where I tell you about three stocks I'm planning on buying in the current month or already am buying, and why I'm buying those stocks. So I hope you guys enjoy this. As always, make sure you smash the thumbs up button if you enjoy this series each and every month, and leave me a comment down there on what three stocks you guys are buying in February 2020. I would love to hear from you guys. As always, a few things I just want to cover here before we get into these three stocks is, can we just give a standing round of applause to three stocks I'm buying January 2020 edition? It ended up doing like 86,000 views, and that's the most of any video in terms of the three stocks I'm buying series in its history. Like, that was absolutely crazy, okay? And by the way, I just want to let you guys know, some of you don't even know this, but on my second channel called Financial Education 2, last week I released a video called 3 Dividend Stocks I'm buying now February 2020. So if you guys want to check out that video, just so you know, it's out there if you're into dividend investing. That covers 3 dividend stocks I'm actually buying in February 2020. A lot of you guys don't even know I have a second channel, and yeah, it's just a baby channel. It's got 47,000 subscribers, but we try to make ends meet, okay? And the last thing I want to let you guys know is the pinned comment down there is going to be to sign up for the email list. If you want to receive an email as soon as our Valentine's deal drops, which is going to be an insane deal on the Becoming Master of the Stock Market course, go ahead and check out the pinned comment down there, enter in your name and email, and we'll shoot you an email as soon as that deal drops on Valentine's Day. Once again, that's for the Becoming Master of the Stock Market course that goes into everything I look for in stocks, super in depth. There's like, I don't know, 50 or 60 videos in there that you get to watch. Also has my private email address, so if you ever have any questions in regards to that course, it's usually a $9.97 course, but we're going to do a crazy deal on Valentine's Day, all right? So with that being said, guys, let's start getting in this, okay? First stock up here I am buying currently in February 2020 is a company named Carnival Corporation. Ticker symbol on this one is CCL. As of today, this is about a $43.56 stock, okay? So about 43 bucks a share. If you guys do not know Carnival, it's a cruise line company, okay? You want to go on vacation, you want to go on a cruise. There's a decent probability you'll go on a Carnival cruise line or a company owned by Carnival Cruise Line, okay? There are two other really big players in this, Norwegian Cruise Lines as well as Royal Caribbean, but Carnival owns not just the Carnival brand, but a ton of other ship brands, basically around the world. They're pretty much the biggest player out there, right? And if you think about it, a lot of people are like, who goes on a cruise? And they have this, like, they think, is it just kids? Is it just like, people going on bachelor parties? Is it like baby boomers? And the truth is, it's the Gen Xers, okay? It's those people wanting to go with, their significant other on a trip, or a friend or something like that, basically going on a cruise, okay? It's those Gen Xers taking their Gen Ys and their Gen Zs with them on a trip, okay? It's that, okay? And baby boomers, the baby boomer generation, the retirees, they love to go on cruises. This is something that's been known for a long time. People retire and then they're looking for something to do, right? If you have your whole time to fill, you're looking for something to do. In the cruise line industry, definitely as an industry that interests a lot of people who are retired, because they can take a vacation, they can see, different places around the world that they never got a chance to in their working life. And now that they're retired, and they have, a good amount of savings and whatnot, they can afford to go on cruises. And if you're looking at, the cruise industry versus, let's say, land-based vacations, it's a lot easier. If you want to see the world, it's much cheaper to see it through cruise lines, for the most part, than going on land-based vacations where you fly in an airplane somewhere and you got to book a hotel. It's actually much more affordable, generally speaking, to go on a cruise somewhere. And I've kind of seen it because I booked a cruise recently, and I was like, wow, it's such a difference in price than if I flew to that destination and paid for a hotel there. It's actually a huge difference in the value you get there, okay? And it's also those Gen Yers who, want to go for, celebrate something, or maybe they just want to go on vacation, but they're known for, doing bachelor parties and whatnot on cruise, getting messed up. It is what it is, okay? By the way, I just want to say something, Generation Alpha, my kids got the sickest generation name. We're all got a bunch of like lame generation names, like my kids, 2 and 5 years old. Generation Alpha, is that not the sickest generation name of all time? Like, that's ridiculous, okay? I just had to point that out. I was like, I didn't even know that was what the 2010s and past were called, Generation Alpha, okay? Carnival Cruise Line, this is a very, very simple one. This is not some type of complicated, super high growth stock, blah, blah, blah. No, this is a very simple investment here, okay? Trailing P on this one is 10. Forward P on this one is under 9. And in my opinion, for a company like Carnival Cruise Line, this should be trading at about a trailing P of 16 to 17, forward P in the 15 to 16 range. And so to get it at a 10 and under a 9 on the forward P, on a valuation basis, this is just a slam dunk for me over a 5-year span. This is just a slam dunk for me on a 5-year span, especially a 10-year span on this one, okay? Now, once again, this is not some type of super fast-growing company. They're expected to grow revenues in 2020 by about 4%. In 2021, they're expected to grow revenues by about 6%, maybe a little over 6% in 2021, which is definitely, you know, a good, when you're talking about you're paying a forward P of 9 or under 9 for this company, right? Carnival Cruise Line, and you're talking about you can get 4 to 6% revenue growth per year. Like, that's phenomenal. That's all the growth in the world when you're talking about a company that trades at that low of a valuation. This is not like, I mean, if this was trading at a 30 forward P, or, you know, and I know some value stocks out there that right now are trading at forward Ps of 20, 30, you know, in those type of ranges, and they have revenue growth around the same as Carnival, if not less. And when I look at this one, it's just a very, very undervalued vacation play and leisure play, in my opinion, okay? Unbelievable dividend play on this one, in my opinion. You're looking at a stock that, you know, is approaching a 5% dividend yield, okay? About, I mean, if I'm buying these shares here today, it's about a 4%, you know, like a 4.7% dividend yield on this stock with a payout ratio under 50%. This is super intriguing to me. I mean, whenever I think about a stock that yields, you know, over 4%, I'm usually thinking about stocks that have payout ratios of 70%, 80%. Some of those stocks are even up to like 90% or 100% payout ratios. If you think about like the REITs, the real estate investment trust, right? They have to pay out a minimum of 90% of their EPS in the form of dividends. And sometimes those can be big yielders, 4%, 5%, 6%, sometimes even 7% yielders, but they're paying out almost everything coming through the door in terms of earnings in form of dividends. Carnival has this huge yield on it of approaching 5%, but yet has a payout ratio super low of under 50%, and the company should be able to grow, you know, earnings quite substantially over the next 5 to 10 years. So when I look at this one, it's just kind of like a, you know, a free throw or kind of a slam dunk if I'm looking at this from any type of 5-year perspective. Not the type of stock that has a chance to 10x in the next 10 years. This is certainly not that type of stock. But if you're thinking about like what's an easy money maker that if I look at a 5 to 10 year span, I've made a lot of money in, not just in terms of share appreciation, but in terms of dividend money you receive that you could invest into more Carnival shares or another stock out there. When I just look at Carnival, it's a very easy one, okay? Very good CEO over there. Arnold Donald, who, you know, he doesn't have my favorite name in the world. Like, who names their kid Arnold Donald, guys? Like, seriously, that's like, it's just hard to say, okay? But needless to say, I like the guy a lot. I think he's actually a very good CEO. You know, he's been with the company for years now, and I really like the direction he's taken the company in. He kind of helped right the ship, no pun intended there, because, you know, Carnival was going through some tough times. Basically, when he kind of joined the company, they definitely had some problems at that time, and, you know, he's helped the company grow earnings substantially since he took over as CEO. So I like him. I like the management team there. I like the business model. It's not going anywhere. It's a hard barrier to entry for other competitors because we're talking about these ships are hundreds of millions of dollars, if not billions of dollars. I mean, some of these ships are going $1 billion plus. So it's not just like anybody can come in and compete in this space. So absolutely, I like that one. That is my first stock of these 3 stocks I'm going to be buying in February 2020. And I'm actively buying. Stock number 2 up here is a company I've never talked about in the history of the YouTube channels, I believe. And this company is called Revolve Group, okay? Ticker symbol on this one is RVLV. And in terms of Revolve Group, this is a company that just went IPO in 2019. So it hasn't been a public company for a super long time, but it's at a very intriguing price now. It's down to about $17 a share, and I've just started buying the stock here in the 17s, and I'm looking to add more shares in the 17s, and especially if it goes lower. It's a really intriguing value proposition on this one, guys, on actually a pretty strong growth company. Now, Revolve, showing you the website there for Revolve, you know, let's be honest, my channel is like one big sausage fest. Like 90% of the people that watch my channel are guys, and so you guys have no clue about this Revolve company because you're a bunch of guys and you aren't buying dresses. I mean, they got dresses on dresses on dresses, but needless to say, 90+%, I think it's approaching like 99% of their customer base are females, okay? And so this is a huge player. I don't want to say necessarily a huge player, but they're definitely a nice size player in the higher end fashion space with women, okay? And how do they have this, you know, big customer base? Well, they're actually using Instagram influencers in a big way that not a lot of other companies have done. A lot of the more old school companies have just totally missed this wave on being able to capitalize capitalize on spreading your brand awareness through Instagram influencers and YouTube influencers and Facebook influencers and TikTok and Snapchat and all those sorts of things. Whereas this Revolve company and their CEO and their management team there, they've been able to kind of understand, wow, these people have hundreds of thousands of followers, millions of followers. We can probably go ahead and pay them very little money, and they'll go out there and promote our website and product in their Instagram stories, in their Instagram posts. It'll go ahead and drive a bunch of traffic, and then we can go ahead and sell products to those customers. It's a beautiful, beautiful thing, and they've done it, just as successfully, if not more successfully, than anybody else out there. While the traditional department stores have completely missed this wave of like the influencer wave, and that's why you see the majority of department stores going bankrupt right now, or a lot of them having a lot of financial troubles, because most of them have completely missed this wave of basically how you advertise in the 2020 and past. This whole thing about spend a bunch of money on television ads, it doesn't add up to a whole lot. You want to be where the people are, and the people are on Instagram and Facebook and YouTube and those sorts of things. That's where you want to advertise, and you want to do it directly through influencers. So here I'm showing you some investment highlights. Now this is on their 2018 numbers, because 2019 numbers have not come out yet. Those will come out probably within the next few weeks, and it will get updated 2019 numbers, and you'll see, pretty much all these numbers will have grown quite substantially in 2019, okay? But in terms of 2018, the company had almost $500 million in net sales. They had a gross margin of 53.2% for such a young company. That's an amazing gross margin. I can't really think about any other company that has a gross margin that sick. That's insane. 50% plus for a young company is unreal, okay? They had positive net income over $30 million. And usually when you're thinking about some of these companies that go IPO, most of them are money losers, and it's like, oh, someday we'll make money. Yeah, like 2 years from now, maybe we'll make some money on the bottom line, or 4 years from now, or 6 years from now, or a lot of them don't even say when they'll ever make some money as far as net income. This company's already net income positive very nicely before they even went public, okay? Look at the average order value they had in 2018, okay? $279 average order value. That basically means that the people that are coming on and using their website have a good amount of money, because you don't just do an almost $300 order on average unless you got a good chunk of change. So the products they sell and the type of customers they're dealing with are, let's say, a little higher value customers in nature. And when you're talking about selling those price points, you can usually make very good profits off of that, okay? I mean, that's an insanely high average order value. I didn't even know it was that high until I looked into the company very recently in depth. It's unbelievable, okay? 79% of net sales were delivered at full price in 2018. This is amazing, because keep in mind, most retailers have a lot of trouble moving clothing items at full price. They just do. And here you are with this Revolve brand, very strong brand, and their customers are not as focused on getting that great value in that, let me get in that 65% sale here today. A lot of their customer base is focused on, I want the most fashionable items, I want things I care about, and ultimately, that's obviously producing some great numbers out of this company. Almost 80% of their sales are full price. And you look at most department stores, I don't know any department store out there, even some of the higher end ones, that could say that they have that type of number. That's unbelievable there, guys, okay? 9.4 million unique visitors per month in 2018, and that number should be over 10 million in 2019, okay? So very, very impressive numbers, needless to say, when it comes to this Revolve company, all right? Now, if we look at their latest quarter, we're gonna see some very exciting things, okay? Total net sales in their latest quarter grew 22% year over year, driven by a 24% increase in Revolve segment net sales. That's very strong growth. So basically the company's growing 20% plus. Phenomenal, okay? Consolidated gross margin was up 90 basis points year over year. So gross margin's already phenomenal for this company, and it even increased more in the latest quarter, okay? Net income, you guys know I love a good net income, okay? Net income up 34% year over year. Adjusted EBITDA up 40% year over year. That's amazing there, guys. So basically, how you want to read that is net income profitability in the end, and the bottom line is growing at a much faster rate than total net sales are. That is something I absolutely love to see, okay? Absolutely love to see that. So you look at the net sales, it shows on some charts here, 22.5% year over year net sales growth, gross margin 90% basis points year over year, net income up 34%, adjusted EBITDA up 40%. Like, look at those metrics, okay? The metrics are very, very strong. This company's been growing for years now. Just phenomenal, phenomenal growth, okay? Next slide over here, we see the cash on the balance sheet. They have over $51 million in cash on their balance sheet as of right now. And think about it, this latest quarter they're about to report, they should have made a very nice net income, because keep in mind this was obviously the Christmas quarter. They're about to report here, looking at November and December, that's your usually strongest sales numbers, whether you're an online retailer or physical retailer. So that cash balance should have probably grown to, it should be definitely more than $60 million, if not more. And keep in mind, this is kind of a smaller company. So to have 60 million plus in cash and continuing to build that number, phenomenal, phenomenal for this company overall, okay? Active customer quarterly trend. What do we see? Look at the chart on this one. It's growth, it's growth, and it's growth. And I think that's very important to look at, how many active customers are using their products, and it's just up, up, and away, okay? Now, in terms of this one, I think I'm really, really excited about this company, because this company has a ton of space to grow in the United States, okay? A ton of room to grow in the United States over future years. Like, keep in mind, most people don't even know of this retailer as of right now. They have a ton of wiggle room to grow the business in future years. But also, international sales are only about 17% right now, okay? And in a given quarter, maybe 15% to 20% comes international. So if I'm thinking about this company, I'm thinking about a company that has a ton of room to grow their business in the United States, plus even much more room to grow their business internationally. Keep in mind, most people don't live in the United States, so if you're thinking about a brand that you want to expand into a global brand over time, you're going to do much more business internationally, and international is for this company, it's just a very, very small number right now. So when I look at this Revolve, I look at this as a phenomenal growth story, US-based and international over the next 5 to 10 years, and I think this will become maybe closer to a household name in future years, okay? Now, in terms of, the co-CEOs at the company, I've watched some different interviews with them, I've heard them on conference calls, and, I don't think they're necessarily the best talkers in the world, but hey, they're doers, they understand business, they understand using influencers for their business, and they understand how to grow a business. At the end of the day, that's what I love. I think over time, they'll get better and better at telling their story, and it will attract more and more investors into the stock, but as of right now, they definitely have some work to do on selling the company to investors. So I kind of watched a few interviews with them, and I feel like they're not at a place right now where they're super good at selling the idea of investing in Revolve. I think that'll get better in future years, and that's kind of the final straw there, okay? Now, when I look at this company, the valuation is extremely, extremely interesting. You're looking at a forward P on this company of under 25. Forward P under 25, and here we are with a business that should grow revenue by 22% roughly, and that's analyst numbers, in 2020. That's incredible, because think about it, they're growing net incomes faster than revenue, and here they are, they're going to grow, revenues expected 20+% in 2020, trading at a forward P of 25. In my opinion, that is way, way too low. When you look at this company, as long as they continue to execute over the next 5 to 10 years, this is the type of company that has a chance to be a $5 billion company or a $10 billion market cap company in 5 or 10 years from now. And here we are with, a company trading at this type of valuation. It just doesn't make sense. This should be a stock, in my personal opinion, trading at a forward P of between 40 and 60 right now when you think about the type of growth this company should have in future years. So I look at Revolve, it is extremely attractive to me as a position I just started buying, and I'll continue to buy these shares any price around where it's at right now in the 17 range, and especially if it goes lower, if it goes back down to like a 15 or 14, I will load the boat with this stock. It's definitely one that interests me a lot, okay? So those are the first two stocks, and in terms of stock number 3, I'm currently buying, that is good old Facebook stock. So I already have a very, very big position in Facebook stock. It's a stock that's $209, and I'm continuing to add shares. Actually, one day last week, I bought 15,000 in just a day on Facebook. I think it was at 203 or something that day, okay? Now, instead of explaining for the next 20 minutes like why I'm bullish on Facebook stock, I'm gonna point you guys to a video that this video did not get pushed by YouTube. I don't know why. Maybe it's because I use the term Facebook in the title or something. This video did not get pushed. And I'm like, this is an amazing video. It's like 20 minutes long, and it goes into Facebook stock very in depth. Go ahead and type that into YouTube if you want to hear my opinion on Facebook stock and why I think these shares are some of the easiest money you can possibly make in the stock market. Literally just type that into YouTube in your search bar there. It'll be the first thing that pops pops up, first video that pops up. If obviously you don't care about Facebook stock, then you're probably going to click off this video anyways at this point in time, guys. So I hope you enjoyed this. Make sure you smash the thumbs up button and let me know what stocks you guys are buying the upcoming month. Don't forget about that huge Valentine's sale. It's going to be the pinned comment down there in terms of if you want to get that on that email list. So we shoot you an email as soon as that deal drops on Valentine's Day. Become a master of stock market. I'm going to do a pretty sick deal on that one for you guys. Thank you for watching. Have a great day.